Do you believe that with some of the weaker data, the United States economy is in a brief soft patch or continued weakness that will ultimately end in a recession?
I would say it's actually a little bit of both. I think we are seeing weakness right now, but that's not uncommon in the first quarter. We've seen that pattern play out over the last 5 or 6 years or so. I do think there's a real chance that GDP for 1Q is the low for the year, but I would say we're trending from a growth rate of, say, 2.9% in the U.S. to about 2% potentially by the end of the year. So I do think there's a slowing. As far as recession, we have seen the yield curve invert. That is obviously, everyone knows, one of the best leading indicators of recession. But it doesn't necessarily tell you when the recession will occur. It could be 6 months from now, it could be as far as 3 years from now.
Yeah, and there's a lot of misinformation around the yield curve inversion. Some people say, there you go, there's your sign, imminent recession. That's not the case. It could take quarters, months, or years. Is there in the market a sense that the yield curve inversion is being overhyped a bit?
I do think you see a lot of commentary about it being, this time's a little bit different. You have seen quantitative easing have an influence on the long end of the curve. So I do think there is some argument to be made for this time is different. But if we look at the past 3 yield curve inversions, you did see major earnings contractions and bear markets about 18 to 24 months later. But at the same time, the S&P 500 rallied in between the inversion and those bear markets about an additional 32%. So it's a pretty uniform view, I think, that you can see further upside in stocks, even though you had a yield curve inversion.
The hottest stock market in the world, the domestic Chinese market. Yesterday on CNBC, one of the heads of Fidelity said investors still under-own China. They are stimulating their economy. Some of the data has been pretty good. Do you believe that the Chinese economy is set for a rebound?
I think it's hard to say that one data point makes a trend. But if you look at the stimulus measures coming out of China, they're pretty large. You have $300 billion in tax cuts and reduced fees to businesses. You also see a lot of credit expansion in January. So I do think you're starting to see a turning in the Chinese economy. I think that is positive for the broader emerging Asia region as well. Countries like Korea, Taiwan, Thailand. I think it's positive.
Can't let you go without getting some investment ideas. Healthcare and pharma, 2 sectors you believe are undervalued, underowned, and are worth our viewers' money. When you say healthcare, are you talking about the payers, the insurers?
Just the healthcare sector in general, we think, particularly pharma, those areas as well. One of the reasons you like healthcare so much is that they tend to have positive earnings growth, even in economic downturns. If you look at earnings expectations for the healthcare sector this year, you're talking maybe 7% EPS growth versus 5% for the broader S&P 500. They also tend to be one of the sectors that outperforms after you've seen yield curve inversion. So I think there's positives there.